All right, so right now we're looking at Ethereum USD, okay, and we've had some moves to really show that we have a willingness to go higher, right? This down movement, breaking the structure right here, coming back, revisiting it, and then attacking it. And this past move has filled in more of the imbalance. So, potentially we can see this shoot higher. So I'm liking what I see over here on Ethereum. You have that same move that comes in, fills in all the imbalance right here. So all of this is pretty efficient. And we came in, we filled it in, and we pushed higher. We came back in, filled the imbalance, or coming in, filled the imbalance on lower time frames. Okay, so as you can see, this area right here, we had that first push up, and we came down back into it, filling this back in. Well, we had that next push higher, and you have this imbalance right here. When we start going sideways in this area right here, create liquidity, fill in the imbalance. Right, you see this down candle push up. So you had this imbalance open. You had these lows that get created, and then that push down, filling this in. I'm trying to talk really fast so I can get this info across before we go higher. But you have liquidity being created, this down push coming into here. Then we see this willingness to go higher, right? So follow it for a second. So you have this push up here, filling the imbalance right there, push down, coming back up, right? Filling the spin, coming back up. This is all efficient. This was inefficient. This was inefficient. This was all efficient. Go back up, push down, make liquidity, come back up, push this. This is feeding into this. So ultimately, this is what you see. You have this imbalance up here. This is all pretty much priced in now efficiently. And then you have these lows push down, push up higher, breaking this structure, filling this imbalance back in, showing signs of accumulation. Okay, showing signs of accumulation. You've got this down candle right here. We have this place open, and then we have this open right here. So this is our area of focus, right? So, two ways to do this. Price starts closing above this area, so you enter in here, or it will show willingness to go higher and it comes back down and you enter. Okay? And so entries writing here, couldn't get to the video in time, but now if this gets to revisit back down in here, enter to go higher. Right? But this would be that area of focus, or this was the area of focus. Prices reaching down did not come into here, right? And then starts showing that it's wanting to accumulate right there. Thought that this could start sticking into here. It doesn't. Reverses, goes above this area, which captured this liquidity on small time frames, closed above that candle, entry, price goes higher, crosses here, so maybe this can still come back, pull in for entry to go higher, but this is where you're looking at to go to, right? Because all of this is efficient, right? So think about it. So all of this is efficient, right? So this is efficient, and here, inefficient. Fills it back in, now it's efficient, this is inefficient, let's bounce up, makes this part inefficient. So this all right here is efficient, this all right here is, this is, but this isn't, now it is because it filled it in, but this isn't, so now it is. Price falls from here, making accumulation, it's open right there, makes liquidity, open space, inducing traders. Right? Same thing above here to here. Okay, and then down below it as well on those smaller time frames in here, right? Then bounces open, so liquidity gets taken to this side, now liquidity gets taken to this side. So now we're looking at here to go higher, or it's going to go higher from here, shooting for up there. Why place stop loss below here? Because technically this is the area of focus, right? So this is the risk reward. Okay, so after this plays out, we'll come back to it and I'll teach more on it. Alright, so in the previous video I was talking really fast, explaining Ethereum, Bitcoin, trying to I guess deliver my point as fast as possible because we were already moving away from where I was playing. Just wanted to get a lot of the information that I was looking for beforehand, before this entire move. So now we can talk about it slow and explain, really what's going on. Just like I said before, so this was going on for Bitcoin, right? Bitcoin was really expanding fast higher, and we were here above this area inside here, okay? But nothing was showing signs of wanting to sell off. Instead, we had price action that looked like this, right? So, you have this area right here that trades back and forth, right? Lots of efficient price action here. So you have this base of liquidity, and you have this range right here that builds up liquidity on both sides, and then for some reason price really spikes down into this area and then rallies higher, breaking this structure. Okay, price coming back down into this area. We scroll inside that 1 hour and we read that candle, right? This is pretty efficient. This is inefficient right here. You have this move higher with a lack of sell side volume. So it's open, price moves up higher, balance here, pretty efficient price action here, balance here, and then ranging. And then we come back down and fill that all in. So the same thing that happens here, right? You have this support that gets created, eyes go under here. Eyes get really attracted to obvious wicks. Price gets pushed really violently down again into this area, filling that up. Same thing that happened here happens here. And so we're seeing a form of price control, right? Price comes back down, testing this area, that same thought, right? If we were to draw our circles, right? Price pushed down on purpose to buy. All right, when price pushed down, it's freeing up all of the stop losses and entering in sell stops under here. And then price flying higher, price returning back down, canceling sells, adding on buys. Same thing. Right, that price control, shoving down under support, picking up orders, price reversing. Okay, and so the same thing repeats over and over and over again. Right, and this is that price control that I'm talking about. Same thing, shoves underneath support, goes higher. Okay, so this is the information that we were using to plan the entries and direction over on this asset. So this is where we were. Okay, and so that same move that happened here happens here in its own way. Right, you have that range. Okay, you have that support, people drawing trend lines, stuff like that. But regardless, people, doing whatever they do, which is going to cause them to bunch up stops underneath here, stops underneath here. But the important part is when price comes down, hits that same area that Bitcoin did, that base of liquidity, the area where price was trading really efficient back and forth, and then all of a sudden you've got an imbalance right here. So price was failing on the sell side. There's all buys, no sells, and support causing liquidity under here. We push down into that, filling that imbalance, and then reversing. This reverse right here shows people are protecting this area. People are wanting to buy. Okay, price rallies back up. Same thing that Bitcoin does, Ethereum does, comes into this area, but we want to investigate, right? We go down in the smaller time frames, and what does this really look like? Well, when price really pushed down here, it accelerated quick the other way. Okay, there was a lack of sell side in here. There's a lack of sell side in here. There's a lack of sell side in here and in here. Okay, so when price was coming back to it, it was filling all of that. And then the same thing happens. You have a lack of sell side here, all buys. When these areas of accumulation happen, okay, you got to think, there's large players playing, and when they're taking large positions and stuff like this happens, it's a lack of a one-sided market. They're trying to buy up, scoop up positions. Well, there's not many sellers here, and that's why price moves so quick. And so price will return back to those areas, making it efficient. The markets are controlled by these larger players. Their job, just like anyone else, is to make as much money as possible, but the difference is, it takes them time to accumulate their large position. Okay, and so they're averaging in these areas, and they can only grab up so much before, price starts moving away really fast. This is why these imbalance areas get filled in. Okay, but this isn't where, we're looking to play. Now we're looking to play, okay, because you see the difference in this area here versus this and this. Right? It's just running away so fast, but causing those inefficiencies. And so now we look at it like we do. So ultimately, this is that first key area we want to see price being held up. Inside here, same thing, right? That imbalance. And so now price is being held up in this area, and we are really going sideways. We're showing signs of accumulation, and we've got other things that are running higher that show us that this could potentially run higher too. And so you can really see it a lot easier on the 15-minute. But really look at this. Right? Price is efficient in here. Price slips. Now it's efficient. Price is efficient here. Price slips. It's efficient here. Price slips a little bit, comes up, makes it efficient here, slips down. Now this is all efficient. We come back up. This is efficient. All of this now is pretty efficient from here to right in there. Okay, so theoretically, if price is going to show a willingness to go higher, it should take all of this back, right? Because it's all efficient. So if price is going to sell off, it should come up into these highs where this is all efficient. This is the only part that isn't, and then sell off if it was going to do that. Or price wouldn't stick in here, and this is all efficient here. This is all efficient, and this is all efficient. So technically, these lows, since it's all efficient, should be protected. Or if it runs all of this, it'll run here, and we'll come into this area where it's not efficient, right? So we have our frame of where we can enter, where we can place stops if we're looking for buys. So inside these areas, there's liquidity swipes that are happening, price control that's happening, right? You have this low, gets taken here, fills in the imbalance in here. Price goes back up. This low gets made, this low gets made. Now you have a solid body candle underneath those wicks, and price going up, breaking this small time frame market structure. Okay, so we have our price control bulk volume area here, and now we just frame entries. On the beginning video, the first spot was here, right? But we talked about down in here, right? We got to be open to where potentially the market could go inside that entire candle, right? Inside this entire candle. Because we know that if price dips below here, there's a high probability it can run this low, run this low. They're big wicks, liquidity will build underneath them, and this is all pretty efficient. 1% loss here if you use this low, right, and then entered in here. Or you're entering inside here and your stop is below this low, right? But that's a bigger risk. Okay, so that's two ways to enter. Here, stop below here. Here, stop below here. Or here, stop below here. And so now, price starts moving higher. And the same thing happens. Price, when it hits off that 5 minute, we have accumulation going on. Price moves up higher, causes imbalance, that slip and buys where not a lot of sells were offered, and then price dips right into it and then goes higher. Okay, now depending on where your data is coming from, you got to understand crypto's different. Okay, and so there you have it. Coinbase actually slipped a lot lower than what they're showing. I wish I would have screenshotted it. But yeah, so I believe it dipped like down here. So now they're not showing it. The data feed is gone. Where I margin is on Bitfinex. That's where my data comes from. But yeah, Coinbase slipped a lot lower. And so now, we're riding this up. And so the same thing, we're following it, right? We're following it for management purposes. The same thing that happened back in here with creating support and then washing it. The same thing that's happening in here, right? Force push down, gets bought back up. Where did price go? Right to here, that last area where price reached below these lows, filled in a little bit of the imbalance and left. Okay, on the 5 minute, you can see that candle that did that same story, right? You have support, pushed down on purpose, and then rallied. Support created here, lots of liquidity build up, and then flush down to it, gets bought up, same thing. You have an imbalance that gets created, and now it's pretty efficient, carrying up all the way through, right? This was the only inefficiency, filled. This was the efficiency, filled. Inefficiency in here, filled. Now you have imbalance right here that gets created, pushes down into it a little bit, filled, and there you have it. Now we're expanding a lot higher. I was aiming for inside here minimum, but nothing showed slowing down in any of this, right? There was no signs of reversing at all. Position and in for the ride, So, I was speaking at the beginning of the video before all this has happened as fast as I could and delivering the information that I could, and didn't get to come back and make the video fast enough for in here when all of this was happening. But, the point is for, y'all to learn from what I'm showing. So, hopefully there was some breakthroughs from this, and expect more to come. So I'll see y'all next time.